Hey, this is Warren Redlick with a breaking news story out of China and Europe. It appears that the battery maker CATL, a big supplier to Tesla, has reached an agreement with BMW. It looks like BMW is going to start using 4680 cells. 4680 is an innovation started with Tesla. Tesla right now is the only company in the world using 4680 cells. This is yet another example of major industrial producers adopting Tesla technology, signaling that Tesla really is the market leader. Some more details. This is about a new series of electric models from BMW starting from 2025, so it's going to be a while before they start using them. Tesla started using 4680s in 2022, so BMW about 3 years behind. According to the agreement, CATL will deliver to BMW Group new cylindrical battery cells, standard diameter of 46 millimeters, probably 4680. I suppose it's possible it's 4690 or something, but 4680 seems likely. Will be produced at two of CATL's future battery plants in China and Europe, each with an annual capacity of up to 20 gigawatt hours dedicated to BMW Group. I want to talk about this point here. Annual capacity up to 20 gigawatt hours dedicated to BMW from each plant. That's a total of 40 gigawatt hours. If each BMW has a 100 kilowatt hour pack, that's enough for 400,000 vehicles. That's not game changing, but that's significant for BMW. You can see up here a little bit of fluff, but a major leap in EV technology with regards to energy density, charging speed, and range. This suggests that they're hoping to achieve maybe 300 watt hours per kilogram. That would be a good sign, maybe more than that. There's an interesting detail here. CATL is going to use cobalt and lithium for the new generation of battery cells sourced from certified mines. The fact that cobalt is included in the cells means these are not lithium iron phosphate cells. CATL is primarily known as a lithium iron phosphate battery producer. Lithium iron phosphate does not use cobalt. And it's commonly used in Tesla's Megapack, is used in Tesla's shorter range vehicles. Lithium iron phosphate does not have high energy density. So this suggests that CATL is diving into 4680 nickel-based cells, which are higher energy density. And then there's a lot more fluff in the article, but I want to go back to this point about up to 20 gigawatt hours dedicated to BMW Group. It's very possible that CATL is going to build battery plants that produce more than 20 gigawatt hours each. Maybe they're going to go for 100 gigawatt hours each. And what they don't dedicate to BMW goes to Tesla. Tesla already has its own 4680 production. Panasonic is making 4680s for Tesla. LG Chem is making 4680s for Tesla. CATL creating a battery plant to make 4680 cells. Very likely that these will be an additional supply of 4680 cells for Giga Berlin or other Tesla operations in Europe. By 2025, Tesla is likely to have another Gigafactory in Europe. This is also really important for BMW. Let's talk about BMW for a second. Goldman Sachs did a note on BMW's EVs, and BMW expects to sell 240,000 to 250,000 battery electric vehicles this year. That's not bad. It's not anywhere near Tesla's production, but still not bad. And BEV presumably means battery only, not hybrid. I don't know. It's not really clear from the article, but it seems like it's pure battery electric. And my general sense is that the current generation of BMW EVs are not super competitive. They're not truly engineered to be BEVs. They're to be electric vehicles. They're conversions or they're modified their existing vehicle platforms to use EVs. The hope is that this 2025 generation of vehicles will be fully engineered from the ground up for EV, and they'll be a lot more efficient. They'll be a lot better vehicles. So note that they shipped absolute sales of greater than 75,000 units in the first half of the year. This they're claiming is more than Audi and Mercedes. So BMW doesn't get a lot of attention for its battery electric vehicles, but apparently BMW feels they're doing pretty well. And the market should probably notice that. I think because the EQS from Mercedes was engineered from the ground up as an EV, gives them a little bit of a lead. Mercedes has a little bit of lead over BMW in that area. And Mercedes is rolling out more vehicles that are engineered from the ground up as EVs. So BMW might be a little behind there, but they're certainly making a commitment to move forward and not be behind. I don't know how you get from 75,000 units in first half of the year to 240,000 in the second half of the year. That doesn't seem like a growth curve that's typical of legacy auto, but maybe BMW has more vehicles coming online. We'll see. And then for 2023, BMW expects battery electric vehicle sales to grow to greater than 400,000 units. Okay, let's see you do it, BMW. And they noted that their profitability on BEVs was better than the company had anticipated 24 months ago, thanks to strong demand and pricing. My sense is that BMW does not make a lot of money on their battery electric vehicles, and probably when you account for the engineering cost of designing these vehicles, they're probably really losing money. But on a cost of goods sold, leaving out all the R&D costs, maybe they're finally making a little bit of money. They make more money on their gas cars, but if they can re-engineer their BEVs from the ground up, then maybe they can actually make significant money on these vehicles. Maybe they can deliver a lot of them. BMW EVs that I've seen so far tend to be high-end vehicles. They're not, they're not competing, I don't think, with Model Y or Model 3. They're going higher end, but let's see what they deliver. And just a further note here, it's interesting that Goldman applies a multiple of 6.5x to 2023 earnings per share for BMW. This is a low number and indicates that Goldman has very low expectations for BMW's growth. This suggests, honestly, that they think BMW is, if anything, shrinking rather than growing. Tesla's current forward price earnings multiple is significantly higher than this, but should be, for Tesla's growth rate, the price earnings multiple should be like 50 or 80. I think right now it's around 30. But, if you go with Gary Black's $8 a share for 2023 and a current share price of $290, let's say, Tesla's multiple is like 35, let's say. So this is, which indicates Tesla's very rapid growth. This indicates that Goldman does not see BMW growing from their current state very fast. It may be that if they're able to demonstrate high production of battery electric vehicles going forward for the next couple of years, and they're able to really shift over their product line to BEVs and make money on them, then maybe Wall Street, Goldman Sachs will come around on that. Just really quick, while we're on the subject of Goldman Sachs did a analysis of Tesla after meeting with Martin Viecha of Tesla's investor relations department. I love Martin. And they noted that Tesla's automotive cost of goods sold per vehicle fell to about $36,000 in 2021 from over $70,000 in 2017. This is partly driven by shifting from Model S and X to Model 3 and Y, but it's primarily driven by more efficient manufacturing and particularly shifting manufacturing. The share of manufacturing being done outside of Fremont, which is their most expensive factory, heavily done in Shanghai now, and we're expecting to see low cost of goods sold out of Texas and Berlin as well, because these are next generation factories. So they note cost of goods sold per car can trend lower over time as Tesla benefits from the ramp of the Berlin and Austin factories and the reduced percentage of vehicles coming from Fremont, a converted ICE factory. They also mention the Inflation Reduction Act, but Goldman says it's too soon to say what impact it will have for Tesla. I don't agree that it's too soon. There's pretty obvious signs it's looking good, but a lot will depend on guidance from the government about how the law will be interpreted. This relates to a question: does Tesla's own production of battery cells at Giga, Texas count for the Inflation Reduction tax credit? Because the way the tax credit is written, it sounds like you have to supply them to someone else. It may not count if you supply to yourself. People I've talked to said, no, the intent is if you're making battery cells and then you're supplying the vehicle to someone else, you're covered. But then if Tesla makes a robotaxi and keeps it its own fleet, it may not apply there, so there's a lot of issues there. Goldman says the act does seek to encourage a North America-based EV supply chain, and Tesla has more local manufacturing than average, with Model 3 recognized as the most American-made vehicles. A little bit more from Goldman here. We are buy-rated on Tesla. We believe that Tesla, given its leadership position, blah, blah, blah. We expect Tesla to expand margins in the intermediate term, well positioned to capitalize on long-term shift to EVs. Our 12-month price target of $333. Remember, we're trading around $290 a share now. It was around $260 or $270 when this was published, so they're looking for significant growth, and it's based on 9x applied to electric vehicle Q5 to Q8 estimated revenue. So this is a revenue multiple, not a price earnings multiple. But if you look at our forward earnings and say it's $8 a share, I think 10 or 12. But if you think $8 a share, They're giving Tesla a massive price earnings ratio of 40 or more, compared to they're giving BMW a 6.5. So Goldman thinks that Tesla is growing fast, and they think that BMW is not growing. Very, very interesting take on this. What do you think about all this? Please let me know in the comments below. Please check out my other videos. Support this channel on the Locals platform on Patreon or as a YouTube channel member. Check out the t-shirts at elonbits.com. Please like this video, tell your friends about it, and subscribe. Thank you so much for watching.